Hey, everybody, it's Katie and
Matt and
Ryan. Happy August, everyone.
yes, welcome
Happy
back,
August.
team, and welcome back, all of you amazing followers and audience members out there that follow us month to month. Thank you so much for your comments. We love hearing from you. Let's jump right into it, guys. Boy, July was hot. Physically hot.
Yeah.
In more ways than one, absolutely.
Yeah, no kidding. It moves so fast too. I can't believe we're already at the beginning of August. It's absolutely crazy. But let's hop into the rate update. Ryan, I know you have lots to share. So it seems very action-packed over there. What's been cooking?
Yeah, that's what I was referring to. The temperature's hot, and so is the interest rates going right now. It's been a very good 60 days for mortgage rates, really, after seeing a jump in rates on July 1st because of disappointing, really, inflation numbers. We've been on a steady drop since then, and a big reason for this was the big news yesterday on July 31st. We're recording this on August 1st. The Federal Reserve Chair Jerome Powell had a press conference, and he did confirm the markets, as had been expecting this, but he did confirm that they are going to be dropping interest rates most likely in September. And they had really been holding the funds rate for a while, and they had been increasing it since March of 2022. So that's a big announcement. And so as of really the main reason for the announcement really, though, is inflation has seen a significant drop, from close to 7% to about 2.5% today, really. So we're very close to their target. And as a reminder, the Federal Reserve funds rate, it's the interest rate that banks charge each other to borrow and lend, really. So the rule of thumb is as the cost goes up for banks, they have to pass that cost on to borrowers. So short-term rates are higher, like credit cards, car loans, personal loans. And really, like the federal funds rate, it's a way for them to control spending. And the rate increases really have worked because we've seen such progress in lowering inflation. But the last thing that the Fed really wants to do is slow spending so much that we get into a recession. So that's part of the reason why they are looking to make these cuts. So that they want to make borrowing a little bit cheaper and to increase spending. And this does eventually trickle down to mortgage rates. Just the announcement yesterday, put some FHA and VA rates at about a 5.875 range without any kind of extra buy downs or anything. And conventionals getting kind of in the mid sixes. This was a big improvement from last year when we hit almost in the low eights. So we should continue to see these rates drop as the Fed reduces the funds rate for the rest of the year. But just the announcement, just already we're seeing improvement. So it's a pretty exciting time for the second half of the year.
Yeah, very exciting. Have you seen this? Now, I know this is very recent news, but have you seen the activity change in incoming applications, buyers that are sitting the fence, maybe now hopping off? Like, what are you seeing there?
It's interesting. We haven't seen like an immediate reaction yet. I know it's pretty early, but I was reading there was a survey where they polled 900 prospective home buyers, and it showed that 38% of them are pausing their search until after the election. And on top of this, because affordability is still an issue because we have such high prices and rates are better, but they're still elevated. So there's others also that are waiting for rates to continue to drop because they're hearing that they're heading in the right direction. So it's interesting. We're still seeing some people on the fence for those two reasons right now. Are you guys seeing the same thing?
Yeah. What we're seeing, I mean, we haven't really seen anything different than I would say the normal seasonal slowdown. Like it feels very normal to me. July is usually a little bit slower, as compared to even other summer months. July tends to be when kids are getting back into school, when parents are taking the last minute vacations. They kind of have other things to focus on during that month. Plus it's real warm, and I think that has something to do with it too. We felt that through July, but we certainly didn't stop. I mean, we still sold properties through July. And Matt, I know that you have some information to share in terms of inventory levels, because obviously that affects things as well.
Yeah, and I think inventory levels, especially where we've been at. It's been such a I'd say a delicate balance between supply, demand, and clearly interest rates. And everyone's wondering, how much do rates really play in this? Obviously you have economic factors that are really, really driving things in every city. And, so trying to determine that, has always been like, where are we at? What's really driving the buyers right now and sellers? And this last week, we dropped 2.1% in inventory in Greater Metro Phoenix, and that's been the biggest drop that we've seen in like over 90 days. And to see that right now, in the beginning of August, end of July, which is typically, our slowest market. This is when
Right.
Arizona schools, unlike most of the rest of the country, this is when they're starting back to school. Kids are going back to school at the end of July, beginning of August. And as everyone knows, most families are putting everything on hold during that period of time, especially when it comes to, hey, are we moving? So we've always kind of seen that this period of time to be very, very low. Then you have us being, a sunshine destination. People are leaving. It's really hot. So if they are going to get out of Dodge during the summer, this is when they're going to do it. So the fact that we saw, a decrease of 2.1%, I think tells us, people aren't listing as much, but people are buying. And that is very much, I believe, right on the back of everything that Ryan just said. People saw this happening. They were seeing the difference in rates. They were looking at what was going on with inventory. And I think you start to see that. And buyers are like, wait, we got to strike while the iron's hot. What this tells me, though, is like, what are we going to see in a more a market that really supports, lower inventory, which we're quickly approaching our fall market. That's usually, post September, October into right before the holidays. We always usually see a really good surge as far as demand goes. And if we're seeing, this type of turnaround based on rates, and we continue to see rates drop, and now more of a hot seasonal time, are we going to see a decrease in inventory, spike even sharper? Are we going to see a 5%? And I think the second we start seeing those type of numbers, it's going to ripple through not only what buyers are seeing, but investors are seeing, and it's kind of going to snowball. And the fact that we're sitting at 15,000 and some change on single family homes, or actually as our inventory goes here in Arizona on everything, that's not high. If we start to dip in below 10,000, which wouldn't take a lot, we're going to be right back to where we were.
Yeah. Yeah. And the first thing that we typically see go when we are shifting markets is concessions. Would you agree?
Oh yeah. That's going to be the first thing that we're looking for. So even those buyers that are active and you're out there, looking at things, if you're starting to slowly see that, more offers are coming in and you're getting offers declined more, I think that's a real big indicator. Because the second you start to see those concessions disappear, that's a sign that we're going to start seeing inventory drop. Then we're going to see no concessions. The next thing you know, we're going to start seeing overpriced offers being submitted.
Yeah. Last two offers that we've received on our listings, both are in sellers markets, kind of topping the charts as to hot markets. And both offers came in less than list price with concessions, but with counter offers, both accepted full price counters, but with their concessions.
But that's right there. That says that people are like, okay, we're confident, but it also says they don't have a lot to choose from.
Yeah.
That says, hey, we do need to move, but we're not going to play the game to lose it. Where if all of a sudden they had the confidence to say, you know what, no, this just isn't worth it. I'm seeing a lot of other stuff. We would see it right there.
Yep. I totally agree.
I think this could be a pretty good precursor. And I think, it's something to really keep your eye on, especially if you are a buyer. And secondly, if you are a seller, if you're really saying, hey, I was planning on selling, and it could become even tighter if you're looking to, find something to buy and then end up selling your home and, doing that contingency purchase. People that are looking to do those as sellers, it's going to get even tighter.
Agreed. And I think sellers for right now need to be prepared to see concessions come over. I'm seeing it on every single offer.
Yeah.
And, we have had some conversations with some sellers where they have said, hey, you know what? I don't want to pay their concessions. If they can't pay their own closing costs, well, then maybe they shouldn't be buying a property. But that's going to cut out quite a bit of your market if that's your stance at this point. Because I am feeling, and maybe Ryan, you can
Yeah.
support this, but I'm feeling like buyers are still feeling the pinch out there. I mean, not only do we have higher rates, that are affecting their wallets, but gas and food and like all the things, all the essentials that we need to live are affecting that as well. So I still feel like sellers need to be prepared for that and open to that. I'm not really seeing any light appraisals, so I'm not super worried about that. Ryan, are you seeing any light ones?
Oh, we're seeing some over appraisals right now,
Yeah.
actually.
Yeah.
And it's been interesting. We had one a house where a client purchased a home for 680, and the appraisal came back at 740.
Yeah.
Wow.
Yeah, and it
Crazy.
was obviously during a time, like you said, guys, in the summer where it's usually slow, so there's not as many buyers out there in Arizona. And I think, there's a lot of buyers that are just waiting for some kind of a shift where they have a little bit more power. And there was a little window where they did. There was a little bit more inventory, and maybe not as much buyers out there. So there were some deals to be had. And I don't know how much longer that will be the case, but we're not seeing really those low appraisals. No.
Ryan, as far as like what Kate was asking before, as far as how are you seeing when you're talking to, your clients and they're saying, hey, I would like concessions and this is the amount that I need, and seeing them like go into it saying, yeah, I'd really like to get as much as I can. How many of those are getting everything that they initially anticipated getting versus are they settling and you're seeing them come through with less concessions?
Yeah, we are seeing more concessions getting approved, actually, and it's more of adjustments to the purchase price.
Mhm.
So we're starting to see that a little bit more where if they're putting in an offer and they kind of lowballed and asked for concessions, if they get a counter back, they're usually okay going a little bit higher on the purchase price, but keeping the concessions because you could do more with that. You could
Yeah.
really buy down the interest rate, which is going to impact your payment a lot more than the purchase price is. So we are seeing a lot of buyers really trying to hold on to those concessions and maybe go in right at price, at the offer
Mhm.
price to make the deal work. So those seem to be more important, and those seem to be what we're seeing more come through on our contracts.
Yeah. We, for the first time, because of course, we're embarking on this change in our industry, right? And for the first time yesterday, we received a concession request to cover the buyer broker fee. We all know that, with the NAR settlement, the co-broke that used to be advertised on the MLS has now gone away, and now it's up to the, specific negotiations for that particular property to negotiate that at this point. How are lenders handling that? And how are we going to see that unfolding going forward when it is considered a concession? Because it can go a couple of different ways, but let's just say the negotiations settle in it being a concession. What does that look like on the lender end?
Yeah, fortunately, I mean, you can get a lot of concessions, obviously. Like FHA allows up to 6% of the purchase price. Conventional goes from 3 to 6 to 9, depending on how much you're putting down. But from what we're hearing back, especially on VA, that's always been very strict about their commissions and who's paying for them, is that if the buyer is paying for these, they're not counting towards those concessions. So the concessions you get, the max that you could get between 3 and 6%, depending on your financing, that just goes towards closing costs. But what's paying for realtor fees is not going to be a part of that.
Got
Interesting.
it. And go ahead, Matt.
Do you see the banks going to allow this amount to exceed appraised value if that was to be the case?
They still won't, though. No, we can't go over appraised value. That's correct.
So that's interesting, but it's also good to hear you say that things are coming in at higher appraisals because that's good news.
It can make the difference. Yeah.
Yeah.
What about VA? Now that you have brought VA up,
Yes.
there has been an adjustment with VA guidelines. Now, I had heard that it was a temporary adjustment just to kind of allow for the changes to take place so that we can move forward with this. But prior to, buyers could not pay the commission for their buyer broker.
Correct.
Is that
Yes.
correct?
Buyers do not pay for any kind of commissions. So now with this change, the first thing that came up was what's VA going to do?
Right.
Are buyer's agents not going to get paid on VA deals? So they did. They announced a couple months ago that this is temporary, but I'm sure it's going to become permanent just with the current landscape of how the commissions are going to be handled. But they can now pay for it. So that makes it similar to all other kind of financing where VA is like FHA and conventional. So that's good news.
Yeah, absolutely. Definitely good news, because it was up in the air for a moment, and that was a question. And our poor veterans, bless their hearts, we got to help them out, man. So I'm glad that they made that adjustment. Anything else that you guys want to add, either about interest rates coming into the fall, inventory, NAR settlement, anything else?
I guess just the only thing that I'd add is like what we were talking about before, is just even news and how you're reading it, how you're digesting it. We're in a time right now that news is a lot different than what it represented 25 years ago.
Yeah.
It's more of a marketing tactic than actually delivering information to someone that's unbiased and really just trying to help the consumer in an unbiased fashion. It's just not that anymore. Everything's clickbait. You almost can see how any news, whether it be any news major outlet, they're bipolar. They could literally have contradicting messages 7 days apart.
Oh,
the market's crashing. The market's exploding. It's
right. We have pulled
and
screenshots of these coming from the same publication within a week, 10 days time. He's talking about facts here.
Yeah. And so, but you're then you got to throw the elections on top of it. And we know how elections go. It's just all about smear and whatnot. So as far as you can push that into the gray area, everyone's going to be doing that. So I think it's just, we're going to be inundated with a lot of fear. That's what drives these things. So I think if you're a consumer and you are thinking of purchasing a home and you find yourself to be very anxious and stressed, probably the best first thing to do is just stop watching the news. Because clearly, like, it's just going to drive you crazy. But you just got to be, you got to take an approach that you're doing your own research. You just don't take everything what everyone says, as certain. It's just not the case. So I would just, once again, tell that to everyone on all fronts. Don't, drink it all the way.
And you're at the right place. You're listening to our market update and real boots on the ground news here.
Absolutely. I mean, these are the things that we're experiencing, that we're seeing, that we're, seeing reports of from sources that we know are based on fact, that we trust, such as, Armless and Cromford Report and that kind of thing. So that's where I get my information, folks. That, and like Ryan said, just straight up boots on the ground, just what we experience day in and day out with our clients. And I'm happy to be able to bring that real news here. And I'm grateful to the both of you for doing the same. All right, guys. Well, I think that's a wrap for August. I'm excited to see how August unfolds. Super happy about seeing the rates get a little bit of relief, right? We definitely need that out there. Hope that continues. But again, we've got the inventory thing. It just is never a dull moment.
It's always changing, Yeah, it keeps our market updates interesting, because we're always some kind of news that's affecting the market. So always excited to be doing these.
So true for two Geminis, Matt and I. Like, this is probably the perfect industry, because you wake up and it's never the same as the day before. All right, if you want to catch any of our previous episodes, we've been doing this for a really long time now. So if you want to play a little game and see what we predicted 6 months ago, see if that actually came true, then you can hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Scroll down. You will see the Arizona monthly housing market update right at the top. It is our very first playlist. If you prefer the podcast style on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. You can get us there as well. Please do the things, download, like, comment, review. I actually read some reviews I didn't know we had the other day. That was really exciting and cool. I'll have to share it with you guys. But anyways, thank you so much to our audience and followers. We love you guys, and we will see you next month.
Bye, everyone.